one of the things that we wanted to talk about as before we get further into refined products, where some of those movements are going, we wanted to look at Russia because there's headlines going two different ways. So one of them is showing they're exceeding the cut, they're doing what they said they were going to do. But one of the things that we have been highlighting when we're talking about OPEC production is the importance of looking at exports, because you can cut production but still maintain, if not even increase exports in the same breath, because it's a matter of what are your internal refiners doing? What is internal demand doing? Because if you're not consuming it locally, well, there's only one out now because you can't go into pipelines. And because you can't go into pipelines, speaking about Russia here, they don't have a very robust storage system because they didn't need it. Everything essentially what came out, got cleaned up, went right into a pipe, and then off it went. You don't need a huge amount of storage when you're just maintaining your pipeline. You have some storage, of course, because you need some of the backflow, you need to maintain pressures, you're going to have to do services on different pipes. So you're going to have some, but it can easily be overwhelmed. And as we've been saying, their refiners were being overrun, their infrastructure was being overrun on the export side. So Russia had to, had to cut production. That's just the nature of it. But as we said, and correct and rightly so, exports weren't going to drop. They were going to stay sizable. And here you can see they're still clipping and actually making, when you look at the 4-week rolling average, is making a new 2023 high. And it's driven by Asia. Asia is buying as much of it as they can. You have India still a huge buyer. And remember, India, prior to the sanctions, barely bought, and don't get me wrong, they bought some, but didn't buy it, obviously, to these levels. China has always been a buyer. That's something that's continuing. And then the unknown Asia, you might be like, well, are people hiding it? It's a mixture. People are kind of hiding it. They're doing some lightering. They're doing some ship-to-ship transfers. But they're also, Russia also knows that, well, eventually it's going to be sold to one of these nations. So just, even though China and India haven't come out and purchased it, let's just get it over there, because miles per ton matter. It takes time to get there, much longer than it does to drop it into a pipe and move it to Poland or Germany. Going on a boat to India versus going in a pipe to Germany are vastly different time periods. And that's some of the key things that they have to look at. So then when you start looking at, again, the flows, the Pacific is something that they've been trying to increase, but I want to call attention to the Pacific pre-sanctions and post-sanctions. There is a limit to what the infrastructure can handle. And this is something that we've been trying to highlight, where even though, and again, you can compare it to January versus May, there's some flex. I'm not saying that it's a fixed number. There is a flex there, but it's not like they're going to go from exporting 3 million barrels a day to 5. There is a limitation on slips, on pipes, on just coastal capacity, on pipeline, on storage. So again, these are limitations. And one of the things that we had said over the last couple of weeks is they were getting towards the maximum, which is why they had to cut production, because they were overwhelming the system and they had to pare back. Now, the Middle East was able to push some crude into the market. And it's interesting because you normally kind of get a drop right now. And one of the things is, when you look at the pricing, the Middle East doesn't offer OSP discounts the way, as we've talked about West Africa. Physical prices will fall from $1.90 to $1.10, or from $1.10 to negative $1.10. The Middle East will offer discounts in different ways. Free submerge for 48 hours. Free storage of that ship for 2 weeks. Things that will inherently bring the price down, but not on an OSP level, just on a net number, because there's your fixed costs and then kind of your soft costs, which are those pieces to it. So they did get some movements. This is when, we're in May now, so they should have reduced production. They should have reduced exports. This is a good thing to see. We did get some late buying in April and the first week of May, which has now tapered off. So this could have been that last sweep of April, May. And that's why the next 2 to 3 weeks is going to be really important, not just for the Middle East, but also West Africa, to kind of see where things are starting to play out. When you look at the U.S., on the 4-week rolling average, we're still at a very high level. That's going to stay there. We still have a lot of buying from Asia. That's not stopping based on the fact that, yes, Saudi did cut OSPs, but not by a meaningful number. And again, that's why we're going to continue to see this moving into both Europe as well as Asia. Now, when you look at crack spreads, you saw the bounce. We're now just over $15 for gas oil in Singapore, in Asia in general, and that's something that is pretty good. But it's at the same time, we want to talk to Platts. So Platts put out their figures for profitability in Asia, and they showed profitability for refiners weakening. And it doesn't mean that it's weakening because the cracks are going down. There's also those other costs. Where's gasoline crack? How much does it cost for natural gas or LNG? When you start factoring in these different pieces, it can weigh on what that actual margin will be. So, they're still going to make money at $15.45 on the distillate side. One of the things that we said is there was going to be a bounce, but we see that trend to the downside, and we do see it breaking $10, which is why we do see that drop. The question is going to be, what does the Chinese export quotas look like? Some of the early indications is it's going to be 13 million, which is a lot. And that would be essentially kind of the death nail of driving down profits to a point where you would see economic run cuts. And that's why it's going to be a very pivotal number that people are going to pay attention to, including myself. When you look at Dubai versus dated Brent, you can see that you're right here. You haven't moved all that much. That's something that is going to continue at this point. And we don't see too much variation. You'll maybe get a little bit of an increase, but you can see here, we're not moving too far away. Crude oil and water, as we were saying, it's going to kind of maintain these levels. We didn't see it getting to 2020 numbers, but again, we see it staying elevated. And the biggest driver of that is obviously crude in transit. So we're now, when you take away, when you look at seasonality, we're slightly above where we were in 2020. Again, a lot of crude on the water. There's a significant amount. Miles per ton are increasing. You're getting this elevated level, and you had that little bump. So the bump in crude oil in transit means that some of that came from floating storage, which we can see here. So here you can see floating storage coming down. Floating storage coming down should marry with when transit is increasing. It does. We see this, as we've been saying, tracking very close to 2022. Again, it's all going to be about timing. This can also be revised up or down slightly, so we don't see too much of a pivot here. Some of this was driven by Asia, as we showed earlier, driven by the Middle East, and as we'll show later on in Europe. Here you can see that Asian floating storage trending down, but we do have more products still coming into the market, which is why we do see this, again, trending back towards where we were in 2022. Now, China's supertanker crude imports, you can see, are starting to slow. It's important to look at seasonality here, because you could see that in 2022, in 2017, in 2020, in 2021, this is where you kind of get that peak, and then you start to come down. And it's important to think about timing of crude, because if you buy crude May 10th for loading tomorrow, you're not getting that crude for 6 weeks. Then it's going to sit in a tank for 6 weeks. Then it's going to go into a refiner, get turned into product, and sit in that tank for 2 to 6 weeks. So you can see that China's already bought most of, if not all, of their summer demand. So that's why you see that drop off. And then sometimes you get a little bit of a spike as we get into the middle of June, but then you get that lull between June into July, and then you start to see a sizable increase as we get into August. There's nothing to say that that's going to be different, because we still have sizable increases in storage in Asia, in both SPR, commercial, and product. The diesel side is not looking all that great. Gasoline has gotten better, but again, that we're already seeing kind of that spike and fade. So the diesel side isn't improving to a point, which is why we do see an increase in export quotas, and we will see these crude imports come down. So the problem is you have crude imports, seasonally adjusted speaking, all-time highs going into China, yet you got some additional discounts just starting in West Africa, and you still have a record amount of crude, a very elevated amount of crude sitting in floating storage. So again, China is not going to save us at this point, and that's why we see kind of that step down in crude pricing as we go through the remainder of the summer. Not going to collapse. It's not going to go straight down, but we will see kind of that new trading ranges coming down as we look at Brent. Obviously, OPEC could do a cut. We don't see that in the summer months, but it's going to be an interesting one to watch in general. Now, here's where you can see things are following seasonal trends. China had their Golden Week or their Labor Day, so you see that an increase in travel, then the drop because people are celebrating. And now those increases, the question is going to be, does it track 2022 or does it move back to where it's been? Because if you look at it, China has averaged 15 to 20% above 2022 numbers. Did everybody kind of get it out of their system, make up for the travel, and now they're just going to fall back into their daily lives and their normal routines? And that's going to be an interesting to watch, which I think is going to be important as people maybe adjust some of their expectations if we don't get a sizable bounce. Refining activity starting to turn up. We hit a low of 60.4. Now we start to ramp back up. We do expect this to get to about 64, 65%. And it's all going to matter. It's all really going to depend on, okay, well, what's happening in the market? Is it something where you're starting to get activity coming back, and what is happening with export quotas? If export quotas tick up, this will tick up. If they kind of keep them a bit tighter, while storage is already kind of full, this will slow down a bit. But right now, how we see things trending, this is going to move back up to about 64% utilization rate. West Africa had some nice draws. You had some nice sales as we got into April, first week of May. Now you're starting to see them slow down a bit. So you had things clearing for Angola, but what's left is now they're essentially not waiting at this point. Now they're just cutting prices because they're trying to clear this out. And it's interesting because this is at a very reduced number versus historics versus the last couple of months, and they still have to discount kind of the last couple of cargoes, which again just speaks to some of the problems that we're seeing. And as China slows down its buying, that's again going to hinder some of these expectations. U.S. crude exports, finished gasoline dropped 81,000 barrels a day, still above the 5-year. We see that again continuing to trend lower. Distillate had a bit of a bounce of 260,000 barrels a day, slightly above the 5-year, but again, we see that trending down. Propane, propylene had an increase of 104,000 barrels a day, 602,000 above the 5-year. We see that just staying robust. And then crude exports had a drop, but remember, there's a lot of kind of back and forth in timing, so we don't think that is a big number in general. Gasoline exports should trend down now. The question is it going to be above, trending down, but still above the 5-year? We think that this trends down and right at the 5-year realistically. If things start to pivot a bit and weaken a bit more, which we think is likely, it'll go slightly below the 5-year, but we don't see a huge pivot one way or the other. We do see that pressure point in the distillate side. We had a bit of a counter-seasonal increase in exports. We do see that dropping down and just maintaining below 5-year averages overall, just because of the slowdown in industrial activity, the increase in availability of Russian cargoes, which again is going to keep this on a downward movement. When you look at crude oil exports, again, just kind of the lumpiness within it. Propane, propylene back to the highs. We don't see that changing. On an NGL side, we've had an increase in supply, but all of this is going to continue to flow offshore. U.S. ethane exports, again, moving back up. A lot of that is going into the Asian markets. We don't see that changing. If anything, we could see it increase because there's been some commentary now that NGLs are pricing themselves into the market and to a greater degree into the chems market, which will be a positive for U.S. exports at this point in time. Now, Fujairah, for those that have been following us, we've been talking about how we expected a sizable build in Fujairah. This is actually well above our expectations. So Fujairah had a build of 3.47 million. That takes us well above the 20 million barrel level, up to 23.163 million. That's a lot. So as we've been saying, we expected light distillate to have a sizable build. It increased 1.209 million to almost 8 million barrels. The East of Suez gasoline complex strengthened a bit, but again, the tracking kind of widened between the RBOB and Brent, with some optimism in the U.S. gasoline demand. But on the other side, some market participants are showing caution that the U.S. summer gasoline import demand this year could be moderated by healthier than expected inventories. And a lot of that is, I think, driven based on, because remember, they're looking east to west. And what I'm saying is going to fill that is the Atlantic basin of Europe into the U.S., which again is going to kind of cordon off some of these flows, which is why we have been expecting some sizable builds into Fujairah, especially because at this point, it can't come into Europe, US, and it's not going into Singapore, Asia. So it's kind of stuck in the middle, which is where we saw some of those increases. Middle distillate had an increase of 403,000 barrels, bringing us to just about 3.4 million. East of Suez gas oil market remained under pressure as market participants are expecting that China release coming up. China's April oil product exports fell a bit to a 9-month low, but the export data is still over estimate. So even though it's down for April, people were expecting it to be much worse. And that's what we've been talking about is during the lockdowns, China didn't really slow down on the industrial side. So I think everyone was expecting this big surge, and it just didn't happen, and we don't see it happening. And that's some of the problems that we've been highlighting to this point. And then consequently, the market participants reiterated that they are expecting China to announce at least 10 million tons of clean oil product exports. What you're saying is we've seen it as high as 13. Demand for gas oil is still weak, but if Northeast Asian refiners start cutting runs, there should be some support for China exports as well as some of these regional exports. But again, you're seeing exactly what we've been talking about starting to play out. Heavy resid rose 1.858 million to just over 11.8 million barrels. Spot trading activity at the hubs were subdued, and we don't see that changing in general, just based on LSFO has been fairly stable, but you're starting to see some of that things get bogged down based on demand, especially for the HSFO as well as LSFO, as we see some of the underlying problems. So then when you look at Brent spreads, you could see that things have weakened, but still just back to the lows. The question is going to be, do we move back into contango? Probably slightly, but nothing too crazy at this point in time. So then when we look at what is happening in the physical market, here you can see Norway, picking things up a bit. But as we said, Angola and Nigeria are a bit on the light side, and they're still unable to clear everything without discounts start rolling in, which is why we have some of those underlying concerns. Libya, is going to be just, about 1.06, 1.02, right? But just over about 1 million barrels in exports a day. So again, nothing too crazy in terms of what we've seen outside of some of, we did get some clearing. The end of April, first week of May was pretty good. And now things are starting to slow down again. And that's actually timed pretty closely to that dip that we were showing you in China's demand. And we see that continuing through the remainder of May and into June. Genscape, when we look at Europe, kind of flatlining here. We think it goes a bit sideways at this point, especially as we're getting a little bit of an increase in underlying storage. When you look at gas oil, it had a build of 109, gasoline 19, fuel oil, a huge increase of 171, which is a problem. And here you can see that gas oil, even though the refiners aren't as active, they're not taking in Russian product, but yet you're still fairly comfortable on the gas oil side, which is, again, coming down to where are European flows, where are some of the other flows you're getting the Russian product taking market share, other redirecting. So realistically, there's more than enough here. Gasoline trending back up. The only time gasoline was higher was in 2022. And you could see that without exports into the U.S., there's more than enough product to go from Europe into the U.S. And as that increases, we should see the inventories drop. But again, that's just going to transferring inventory from Europe into the US at this point in time. And then when you look at fuel oil, big surge. The only time it was higher was in 21 and 20. And at this point, and based on the demand flows and the lack of ARB between east-west, west-east, fuel oil will take out the 2021 highs. Then you look at total fuel stockpiles in Singapore. They came down a bit, but again, it's a mixed bag as to why. Light distillate turned back up. You can see it's now just in line with where the highs that it was in 2020. Again, speaking to the problems we're seeing on gasoline, we don't see that improving, which is why we see the problem on the gasoline crack. And here's where we got some of the support for the gas oil side. Middle distillate stockpiles came down, but I think Fujairah is a bit telling of what's to come, which is why we do see this increasing. Again, not a surge, but we will see this starting to increase at a sizable clip over the next couple of weeks, coming back to the high of 2023, which is why we see some of that pressure coming down. A lot of that is going to be driven based on Fujairah trying to kind of stuff some of that gas oil in. And again, that renewed export of product from China. And then when you look at Resid had a nice drop. But again, looking at Fujairah, we see this reversing as well. And not again, reversing to this huge number, but just kind of back to the highs for 2023. North Sea bumping along the lows on floating storage, but trending a bit higher. We think it'll likely trend closer along 2022 lines. And then when you look at Europe, things are normalizing a bit, but we see it kind of leveling off here, and some of that transfer back and forth in terms of timing delays between onshore, offshore. So that's what we have for you today. If you have any questions, we'd love to hear from you. We appreciate your support. Please like, share, subscribe, and we hope you enjoy the rest of your week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. And that's done uploading.